Hi everybody, and so what we're looking at is the S&P on a daily chart. So Martin Luther King Day today on the 19th, so no US markets around. So we've gapped down. This is configured to the 2025 highs. Let me just double check that. No, apologies, it's not. 25 highs are a little lower. Yeah, so we've peaked above the 25 highs, and now we've just come down to find the 50-day average. So nothing unusual about that. That's quite normal. If we come into the first day of trading tomorrow on the 20th of Jan and hold, and close this gap and hold that gap closed, then we can march on upwards. If we just break this low here at 68.50, then this is just going to potentially crack and start to pull over. But it's perfectly healthy for a market to come down to a 50-day average. It sometimes pops underneath it. If it pops back up, that's fairly quickly in the next 2-3 days. Ideally the next day, then it's bullish. Obviously the longer, if you open and close underneath the 50-day average, then that's bearish. So we've got a busy week ahead. Bear with me one moment. With a lot of earnings. So I'm just going to shout them out. Anyway, so I should have them to hand, and I don't. So let's just have a quick look at the FTSE market. FTSE has been very strong. Even that, so the RSI, Relative Strength Index, was very extended. It's come back under the top line, and here's the 50-day average. So we've gone on some run here, and every time you get too far away from the 50-day average, as here, back in mid-November, then it comes back to find support. So this is, again, we are some way away from the 50-day average in this FTSE. So a pullback all the way down to 99.30 would not be unusual. So the RSI can stay strong, I keep saying this, as long as it likes. So the main support is just 10,100, and of course 10,000. Markets love round numbers. So we could easily see 190 pip drop here in the FTSE and still be well within this trend. Alright, so we just had a big burst into the start of January. Now we're in the second half, we are pulling right back. Data, and we'll move on to stocks in a second. Let's check what data is coming up. We've got UK jobs in the morning, and not a lot else. Oh, final GDP in the US. So we have been, the last quarter number was 4.3. We're looking for all that stability in that number on the growth level. Right, stocks. I suggested this one on Friday. I bought this. You know what? End of Friday is one of my favourite times to buy stocks. This is BT. A few reasons why I like this down here. There is a 20% stakeholder who bought down here at 178, 179. So that's where I bought. Look at all that support. We broke up here in June 25. Looked to hold in the middle of October, ultimately failed and dropped to 171. But from mid-December onwards, we've held this 178, and here we are popping up to 185. So if we sustain that move, so plenty of time to get in it. 180 to 183 is still a pullback zone. As long as if we dip and hold and then go and see 190 plus, this could start to make its move on BT. Stocks like Let me have a look. SSP Group, talked about this last week. Yeah, this has been on a massive run and is pulling back. Right, let me just get my list.